CPAs. They have been an amazing partner of ours through many of our programs. They're also just a great resource when we were in need of any of their expertise. So Harris is a trusted advisor and lending provider of specializing in accounting, tax, and consulting solutions in the nonprofit industry. Their services include management, consulting, audits, reviews, compilations, tax planning and research, tax preparation, bookkeeping, payroll services, and more. So with that, I'll go ahead and turn it over to Margaret Flowers.
Happy New Year to everybody. So the Employee Retention Credit is part of the CARES Act. And so we'll just go through what it is. So the Employee Retention Credit is a credit against your payroll taxes that helps you to, or that you can take. It's refundable from the IRS, so it gives you back a portion of your payroll taxes, and sometimes it's more than your payroll taxes. So the first thing you have to do is decide if you're eligible for the ERC. So in order to figure out if you're eligible, you have to look at your income, and it has to be on the same basis as your tax return. So you look at your income quarter by quarter, and you can do the Q2 through Q4 of 2020 and Q1 through Q3 of 2021, and you compare the income on your gross revenue of each quarter to that same quarter in 2019 for both years. You compared it to, we want to get back to pre-pandemic levels. So you compare your revenue to the 2019. And in 2020, the significant decline in gross receipts counts as 50% or more decline in revenue over that same quarter in 2019. And then if you qualify in 2020, on that 50%, you qualify until you've regained enough revenue to have earned 80% of your year-to-date revenue. And then for 2021, they kind of loosened it up a little bit to where the qualification is a 20% decline in gross revenue. And then there's also a safe harbor provision that allows for, if you qualify in one quarter, you automatically qualify for the next quarter. And so if you don't qualify under revenue, there is a government order qualification. This one is a lot more gray, so this one requires a lot of documentation and substantiation. And so if you were partially or fully shut down due to a government order in 2020 or 2021, then you would qualify for the credit. And it doesn't matter if your income is up or down. But in order to qualify this, you have to show that the government order directly impacted your business. And so it could be that the order impacted you, or it could have impacted one of your suppliers or somebody you work directly with that directly impacted you. So it doesn't have to be an order that shut you down personally, but if somebody you work with, or like say you had presentations or there were events that you were going to with other nonprofits or other companies, and that company was impacted, then that impact could come across to you. And then also, if you decide that you qualify under the revenue or the shutdown order, then you have to decide if you're a large employer or a small employer. So in 2020, the large employer is 100 or more full-time equivalent employees. And so that's 100 people working an average of 30 hours a week or more. And then in 2021, they upped that to 500. So if you're a small employer, all of your employee wages, there's some exceptions, but all of your employees count as eligible for employee retention credit. And if you're a large employer, only the employees that you paid to not work would count. And so, so then this table again shows the difference. And the reason that we're now seeing an increase in the ERC is that it changed. So when it first came out, when the CARES Act first passed, there were two provisions. There was the PPP loan and the ERC. If you received a PPP loan, you did not get the ERC. It wasn't eligible. You were not eligible for it. So on December 27th of 2020, they passed the new law, and it they said, okay, now you can take your ERC if you received a PPP loan, but you can't use it for the same wages. And then they passed the infrastructure law this year, because the law in December of 2020, and it expanded the ERC through December 31st of 2021, but then the infrastructure bill rolled it back to it closes on September 30th of this year. So it's only good for wages for Qs 1 through 3. And so then after you decide, if you're eligible and if you're a large employer or small employer, then you have to go through the calculation to see if you qualify, or to see how much you qualify for. So when you calculate the payout, the first thing that you have to do is, the first thing you have to do is look at, did I get a PPP loan? And so what you do is you look at your wages per quarter, and you have to back off any wages that were used in your PPP forgiveness application. And then anything beyond that is qualified for ERC. And the ERC amount is for 2020, it's up to $10,000. The wages are $10,000 per employee, and the credit is 50% of those wages. So it's about $5,000 per employee per year. And then for 2021, they upped it to where it's still $10,000 of wages, but then it's 70% of the wages per quarter. So it could be $7,000 per employee per quarter. And so with the ones that we have seen, these have been huge dollar amounts. I have a manufacturing client that it was $800,000, and they had, I think, 25 employees. And then we had a nonprofit that I think it ended up being $160,000 on theirs for the 2 years. And so it can be a lot of money. The one thing that you do need to know is that it is taxable. Well, you're a nonprofit, never mind. So it would be taxable for the for-profit, but on the nonprofit side, it's not taxable because just by the nature. So it is not UBIT, so it does not create tax. And so once you determine how much the payout is, then you would run, your quarterly payroll reports, and then you amend the 941 to claim the wages. And there's two different ways. There's two different portions, because there's a portion of it that's a refund of your payroll taxes. And then there's a portion of it that's actually refundable, that's above and beyond your payroll taxes. Do we have any questions? Okay, so then we have some, when we've done these presentations, we created some frequently asked questions. And so one thing that we've heard a lot is, can you use the same wages for ERC and PPP loans? And so the IRS has said, no, we can't, you can't double dip. They're going to, because originally you could do one or the other, but then when they said, okay, you can have both, but you can't double dip. So you're not going to get the benefit of both for the same wages. And then, can you claim the ERC if you received a PPP loan? You can now. And so originally you could not, but you can. And so when it first came out, we just kind of ignored the ERC, because if you claim the PPP loan was tax-free, whereas the ERC was not tax-free on for-profit side. So everybody just kind of ignored the ERC. And if you furloughed your employees, are you still eligible? If you furloughed your employees, you didn't pay them. And so the ERC, the employee retention credit, is based on wages you actually paid to your employees. And so if you did furlough them, you wouldn't be eligible for the credit. So it's only on employees that you did pay. But if you furloughed any employees, but you still had some that you paid, you could take the credit on the ones that you did pay. And then whether or not it's taxable is depending on your entity type. So with the nonprofit, it is not. The one thing that we are seeing, we have been preparing these for a while now. The IRS is significantly backlogged. And so they are taking about 24 weeks to process the ERC forms. And even at that point, it could be longer. And so, but if they do take longer than 6 months to process the forms, they do have to pay interest. So people are getting back the credit plus interest. And we have just recently started seeing the funds come through. And so because most people started filing for these in about maybe June of this year. And so we are just now seeing the funds be released. And then a lot of times we get asked about the chances of being audited. We fully expect, because there's a lot of money being given out on these, we fully expect that the IRS is going to look at these. They haven't announced officially yet, but the word on the street is that they are going to start training their auditors in early 2022 for this. They have not been trained yet because it's so new, and it's, you know, with the shutdown, it's very gray. And so they will be training their auditors. And so what we recommend is make sure if you're going to claim the credit, if you're claiming on the revenue loss, make sure you print your P&Ls by quarter for all of the quarters involved and the 2019 baseline ones. Keep those in a file and make sure you have that documented, and make sure that they're on the same tax basis that you file your tax return. So if it's cash basis, you would leave it on cash. If it's accrual. And so that way you can, if you're audited, you can provide the auditor that. If you're using the argument of the government shutdown, you want to make sure that you have that very well documented. If you can print off the government order, if you've had conversations with people about it, either in the government or if it's one of your suppliers or one of your, one of your vendors that is significantly impacting you, you'll want to document, like print off any emails that they have. If you've spoken to like an official about it, document that conversation. Just write, on this date spoke with so-and-so in this office, and make sure it's documented, and just have everything backed up explaining why you feel you qualify, because we don't know what the law is very, very gray. So when an auditor comes through, you don't know what they're going to allow or disallow. But the more facts you have in your favor, and if you can prove that this is what I believed, then that's going to help. But by the time the IRS has 3 years from the date that you file for your 941, the amended 941, to audit that. And so if you get pulled 3 years from when you file, you're not going to remember what happened. So we strongly recommend that you keep a file with all of your backups so that you know and you have everything covered by the if you do get pulled. And can I file for the credit myself? If you file your own payroll tax reports, then it's just an amended form 941. It's a 941X. It's not very difficult, and the instructions are very clear, so you can file, but you just want to make sure that you do it correctly. So if it's not a form you're familiar with, we recommend hiring out somebody to do it. Any more questions or any questions?
And you guys are welcome to drop questions in the chat too, and I can bring those up to Margaret as they come in.
It's one thing, I would strongly look at it, because it can be a lot of money, and you don't want to leave it on the table. And you have 3 years from the date that you filed your original 941s to amend them. So Q2 of 2020 will drop off in July of 2023. So you want to make sure that you have it before then. And we haven't been told, the IRS has budgets, obviously, but with PPP, there was X dollar amount. And once that money was gone, it was gone. We haven't been given an amount on the ERC, but we don't know that at what point, if the government says, okay, we have no more money, that they would cut it off and say you can't file anymore. So I would recommend looking at your records, looking at what happened, look at what your business experienced, and then getting everything documented so that you can time is of the essence, just get it in and get it filed. Especially you want to get that clock ticking, because the IRS takes so long to process these. I did hear that if you filed, I have a client who filed back in June, and with people that he knew, he heard if you called, he called and was on hold with the IRS for 4 hours, and he finally got through to somebody, and they were able to expedite. And most people are saying that if they call in and get it expedited, they'll get their refunds in 20 to 30 days.
Great. Does anybody else have any other questions for Margaret?
Can I put in a plug for our 2022 economic and tax update that we're having on the 20th at the
Yeah,
Voice Center?
of
It's
course.
free to attend. Steve Scranton, he's always got a great economic update, and then Robert Shappy will be doing a tax update for the firm.
Great. Well, guys, thank you so much for joining today. If nobody has any more questions, you're welcome to hop off the call. This will be recorded and sent out to everybody who attended. And Margaret, would you be willing to share your PowerPoint presentation as well that we can send out with the recording?
Yeah, that shouldn't be a problem at all.
Okay, awesome. Well, yeah, we really appreciate everybody's time today. Thank you, Margaret. Thank you, Harris CPAs, for joining us. We hope this was a helpful tool and resource for you. If you guys have any questions about this webinar or any of our future trainings, please feel free to reach out to me. I'll provide my email below in the chat. Otherwise, thank you for joining us.
Thank you. If we can do anything, just let me know.